All right. So the second thing I want to go over to as a day trader, right, guys, very important. And I live and die by this. Okay. Going back into my day trading screen, is the three most important levels for you as a day trader, right? Is this my green line, which is my pre-market highs, right? My red, which is my pre-market lows. And you can't see it right now because the previous day's close is actually right on top of it. But yeah, let me go into another ticker that's a little bit more clear. Let's go. Everyone likes Apple, right? Apple's right here. So here, my green, pre-market highs, my red, pre-market lows, my whites, previous day's close. And I can't stress this enough, guys. As a day trader, these are freaking important. Okay. I know it's very, everyone takes it for granted. They're just like, oh, they're just another levels, right? But the way you use it as a day trader is very significant. And just to backtrack a little bit, if you need these scripted codes, they are in the Discord channel under resources. You could DM me afterwards. I can help you out to set it up. So every single day, no matter what ticker I have on the chart, it will automatically pull it up for me just like this. So if I scroll into pre-market area right here, it'll automatically do it for me. You see how the line just kind of goes up as pre-market moves. So that's going to be a very good plus. So you don't have to do extra work behind the scenes. But how I'll show you what I use, right, is a lot of the times, right, people understand, okay, look, break a pre-market high, yeah, I'm gonna go long, right? Break a pre-market low, I might short it or whatnot. But what they don't understand is how to actually enter the trade, how to actually trade these, right? So again, with Apple right now, we had a directional day, right? We saw the S&P 500, which I tell you guys to watch SPY like a hawk, no matter what stock you trade. For Apple right here itself, from the pre-market low, we actually had a bunch of buyers start to push this back up. So we knew for a fact that this was going to be bullish no matter what, right? Yes, we were in a little heavier, so we were kind of getting shaken out, getting emotionally attached. But just showing you how these three levels play in hand will give you that edge on how you need to trade. So the best factor for me, and I know I'll explain different methods as well, is I always like to see these breakouts from pre-market high, okay, when SPY is also breaking out with pre-market highs, because that tells me that we will have a continuation to the upside, much higher probability. We will have, multiple legs up, right? This might actually almost rally throughout the whole day, which it did for Apple. And this breakout and that retest, right, we can use as a support and resistance level on an intraday level. Okay, it's not going to be a major critical level as we were charting on on a daily time frame, right, or a weekly time frame. But as a day trader, when you look at this like this, okay, bulls broke out. Now by textbook, I want to see that retest, right? Breakout, retest here. Buyers are still holding this pre-market high up. Let's look on the right side too. It's my 15-minute chart. Okay, you can see that bears never push this back down afterwards. We're just smooth sailing after. This is the directional trades, the continuations that I love to trade. That's why you see me day in, day out, freaking 6 something in the morning. Or I'm the West Coast, right? So like 6:35 in the morning, I'll be in when I see these directional trades. I get out, I get a quick scalp, done for the day. Most volatility in the first hour of the day, especially when I see these kind of moves. Very easy, very stress-free. I don't got to trade during zombie hours when everything starts consolidating and moves sideways, and I'm just sitting there waiting for the move to happen. But that's how I like to trade, right? A lot of the times there are traders out there that use this exact exact method. Is, let's just say, Apple sold off here to previous day's close, right? As a trader, you're just watching this now. It doesn't mean for you to enter it yet. You're just watching this, seeing if buyers push this up. If so, your risk would be to the downside is very minimal, and your reward would be to the upside. I know some people trade from this area to the pre-market high, call it a day, and they're done. Some people even get it from the previous day's close, and then they get up to pre-market lows for this particular case. Okay. it's all how you guys like to manage your positions, your risk to reward. If you're a scalper and you want to be in and out, you want to collect profits no matter what, you got to go to your 9 to 5. Hey, you can do this easily, right? When the market gives it to you, make a couple $100 before you go into the office. And there are other methods too. Let's just say we Apple was a very bloody day, right? If this was pre-market high, this is pre-market lows, we actually invalidated, we broke down, and then we kind of bounced off of previous day's close, and then we had a major sell-off, right? And then you're watching SPY too. This is a short signal. This is breaking all three intraday key levels that you had on your charts. And that tells you if you and when you had that retest, that is when I would enter short. Breaking after, out of all of these three levels tells you a lot of information, more than you think that you probably know, because obviously we broke out to the top. So we knew that we had a continuation, a bullish day. So there's no need for someone to try and catch a top, unless you saw higher lows start to form. Lower highs start to form. Then that kind of would have been your indication to kind of tell you to get out. But again, that's how I use it to trade. Top three levels you need to have on your day trading screen. It tells you a lot. Let's just do another example. Okay. Let's look at, I don't know, let's see. Today was such a bullish day, so there's a lot of bad examples. But here, actually here, do like Tesla, I guess. So the first hour, right, guys, we're in no man's land. So for me as a day trader, I know some people, they don't even look at this. They look at this and they just, oh, I'm gonna go in, I'm gonna go out. It's gonna go up, it's gonna go down. Simple, they're just gambling. But for me, when I'm looking at this, if it doesn't break out from any of these levels that I'm looking at, right, and you can see on the right side too, it's kind of dead to me. I'm not even looking to trade this. So Tesla shouldn't even be on your watch list. The way I trade, right, for the first 2-3 hours of the day, right, until it finally broke, then it kind of brings and gives me my attention back to the stock. However, obviously, if you're a little bit more experienced, you do know that the break in the middle of the day is going to be very dry. Volume's already out. East Coast traders on lunch. Okay. This is just all market makers. So you cannot expect this to break out midday unless we have some random news or something like that. And then we start to scale up the same way as we would have it the first hour of the day or the last hour of the day. That makes sense. So simple like that with Tesla. Honestly, for me, I'd even look at it all day. I didn't need to, didn't have to. And then let's go with one more example. I wish there was one that, Boeing actually was good, since we have a bloody one. So Boeing's a perfect example as well. You look at Boeing, you see previous day's close is my white line. Bears push this freaking stock down hard at market open. All right, let me zoom in a little bit further so you can see the 1 day, 1 minute. All right, I'm gonna change this right chart to the 5 day, 5 minute. Okay, so you can kind of get a better visual. Okay, so on the 1 day, 1 minute, Bears just immediately pushed this down. They said, hey, no, screw it. It does not belong up here. It's got to go down. And as you can see it kind of scale out and go down, we had a very heavy selling pressure, right? And like I said before, with humans having two legs, same with Boeing, right? You don't want to catch, or you don't want to chase going down. As it's going down, you're like, oh, it's going down really quick, so I'm gonna chase it and buy puts right away. No, you always want to buy on the retest, right? Even if it's not a retest, you want to buy on the opposite end. So in this case, if you want to go short, you want to make sure that you buy puts on a green candle, right? You might not catch the tops, you probably won't, but as retail traders, your job is not to catch the tops and bottoms. Okay, guys, your job is to get the littles in between, right? Yes, it could be just breadcrumbs, but you can't compare yourself with institutional traders that have millions and billions of dollars. We're here to scalp, get paid, get out. We don't, sometimes you do catch the tops and bottoms. I agree, it's the best feeling in the world, but you cannot beat yourself down if you do not catch tops and bottoms. And I also hate it when you make $1,000, $2,000 profit or 100%, 200% return, but yes, you missed out on, let's say, another 200% return. There's no need for you to beat yourself down. You made 100% return, right? That's a good trade already. And And again, all of this is just emotional, right? This is just you versus you at the end of the day, trying to, better yourself as a trader. But again, let's look at Boeing again. The first leg down with two humans, right? We had a little bounce, right? Dead cat bounce, whatever you want to call it, bear flag. And then we had the second leg down. Okay. 5 puts here. You knew the first leg already happened. Again, as a day trader, the second leg is eventually going to happen. If it doesn't happen, yes, you need to have an idea, a place, a stopture of where you need to mentally have a stop loss, or where you want to actually dollar cost average. And I know this is a big thing for a lot of traders. Some people say, no, just get out of the trade when it hits your stop loss. For me, I trade a little differently. I give myself, similar with these humans 2 legs, I also give myself around 2 to 3 buys. Right. And I hope you guys aren't going 100% of your capital on each trade, because that's not the smart way to do it. So I always give myself 2 to 3 buys to re-up on that particular ticker or on that particular position. So let's just say the worst scenario. You saw this huge flush and you're just like, oh shit, Boeing is fucking going down. You buy puts at the bottom. So on this bounce right here, you're losing money. Okay, you're losing a ton of money, right? But you're giving yourself, okay, look, maybe I jumped the gun on this. Okay, I want to rebuy once more, make it a little bit lower, because I do suspect that we have some more weakness coming. Right now, your average, instead of being right here, is going to be somewhere around right here. So when you have this second leg down, that's your chance. Okay, you guys remember, when you guys are trading, not everything is going to be cotton candies and rainbows and whatnot. You're going to have to sometimes realize, $50 losses, or you're going to capture $5,000 gains. Regardless of what it is, it's not going to happen day in, day out, right? So for this particular trade, you got emotionally attached. You chased it. You bought at the bottom of your puts. So as this bounced back up, you're losing money, but you decided to dollar cost average. You give yourself that first buy. On that first buy, your dollar cost, your cost base is somewhere around right here. On this second leg down, you need to tell yourself, right? Okay, this is the second leg down now. The chances of it having a third leg down is very slim. I already effed up and I bought at the low here. I chased it. This is God giving me that second chance to get out for a small profit, right? And if you do, props to you, because a lot of people don't have that discipline to pull that trigger like that. They just continue to have wishful thinking, okay, Boeing's already continued going down. It should continue going down all day. Why not? No, there's other factors that you need to also look into, right? Is after this second leg down, what is SPY doing? What's the broader market doing? Today, S&P 500, there's rocket high, skyrocket. There was no way in hell Boeing would try eventually just follow, feather through with the S&P 500 going all the way up, right? Or let's just say Dow Jones, right? Because it's the largest, right? With /YM. So things like that, keep in mind when you're looking at it. Oops, remove this. You guys have any questions? Again, though, guys, for these 3 levels, I think it's very important, especially if you want to take day trading seriously, like have these levels. It's going to save you, right? I'll give you another scenario. Honestly, all of these scenarios are the same because everything was trading the same way as well. But here's Neo, broke down previous day's close. Let's just say you wanted to take on a quick scalp with Neo. So you saw this break of previous day's close. So you're like, okay, it's probably going to touch pre-market lows. I'm going to take it here and I'm going to collect profits here. Congratulations. That was your game plan. It worked out for you, right? But from this pre-market low, you should suspect a bounce, right? Or some buyers to try and maybe fake you out and think that it's going to go back out in reverse, right? Which it did, right? But again, your game plan was to enter here short when it falls and take your profits at pre-market low. Simple as that, right? And of course, as it kind of just moves a little bit sideways, kind of fakes you out, these kind of trades aren't the best trades you want to take anyways. So if you had this particular trade and you saw this break, collect profits, be done with the trade, right? You can't force things to say, you know, hey, just because it broke, it should continue to call down. It just doesn't work like that as a trader. Chat. Now I understand it more regarding DCA. Yeah. And dollar cost average too. Elia, I hope I'm pronouncing that correctly. There's way too. I'm just specifically talking about day trading right now because there's a lot to go through. But just really quickly, right? If you wanted to, you know, I know a lot of people swinging Neo right now. Yeah, let's just look at Neo. Let me go back into this chart. And this is how I would, if I entered today with like some of you guys did. Oops, this is how I would trade it if it does not break out tomorrow or Monday. Okay, let me see if you zoom in a little bit more. Again, this is the daily chart, right? Let's just say we have another candle like this, all right, tomorrow. And then, you know, Monday is a red candle like this or something, right? No, it's ugly, but anyways, you get the gist, right? We get another red candle. If you bought 2 weeks out for swing traders, right, that is the bare minimum you should. I do suggest if you're ever swinging anything to always give yourself three weeks out at minimum. And that's a rule of thumb for anything swing trading on my end because I'm a short-term swing trader, right? I don't hold for. I try not to hold for a week, 2 weeks. That's just not my style. I'm in and out. I see what I see. It breaks, it touches my price target. I'm out, I'm collecting, I'm happy, right? Main thing is because, you know, when you trade options, everyone comes into the field having that background, having that knowledge of, you know, long-term investing. So they think, oh, you buy low, you sell high, you just hold forever. Not in options trading. You have everything against you, right? The Greeks, volatility, you know, interest as well, right? And if that doesn't correlate to how you trade, you're going to lose money if this just goes sideways, right? But for, yeah, like, sorry, really quick, just if you want a dollar cost average, give it a day, right? At least a day. Whoops, what happened there? Give it a day. Don't dollar cost average the second day that you buy, assuming that you bought 2 to 3 weeks out at minimum. Okay, because if you force yourself out, you're going to be cash strapped. If, say, Monday we have a nice bloody day, okay, you're pretty much shooting yourself in both foots now. So give yourself some time. And again, if you're ever dollar cost averaging, I do suggest never buying in the morning, right? Latest is probably 2 hours in market when everything starts to die off. Volume's dead, volatility's dead, so the premiums aren't as juicy and buffed up as it would be in the morning. That way you can give yourself that extra room, extra wiggle room, right? Just like my apples, when I dollar cost average, I waited about half the day before I bought at the 85 cents. And it paid out well, right? It worked out very well. Anyways, yeah, that's that. I don't want to take too much time. But other than that, yeah, the last thing I want to quickly go over to is very briefly is the option flow. A lot of you guys had questions. I'm going to do a little write-up during the weekend. Let me go ahead and pull up my Discord. Give me 1 second.